Good morning, ladies and gentlemen. Welcome to Clean Tech Day 2. The highlight for the first half is a panel discussion on top risk mitigating strategies. Do join us at 1:10 sharp for our second half as we discuss about financing and partnerships. We'll be starting our panel discussion now. So let us welcome our moderator, Mr. Jason Dunn, President and CEO of Zend Capital Advisors Japan.
Thank you very much. It's a great pleasure to be here today. We have a very distinguished panel here. Rather than myself introducing them, I'll have each of the panelists introduce themselves, starting with Geoffrey.
Good morning, everyone. Pleasure to be here. My name is Geoffrey Tan. I'm a managing director at the Overseas Private Investment Corporation. I've been there for 10 years now. My own background is in commercial investment banking and private equity, strictly in emerging markets. OPEC is the U.S. government's development finance institution. Many people are more familiar with the World Bank Group. We are the equivalent to the U.S. bilateral equivalent in terms of the products we have in some ways as the IFC, the International Finance Corporation of the World Bank. So I'm happy to be here and speak with you today.
Hi. I'm Bob Schiffer. I'm Managing Director at Mekong Renewable Resources Fund and Indochina Capital. I've been there 2 years and have, which is in Vietnam. The fund covers the region of Southeast Asia, minus Brunei and the Philippines, and it will be launched within the next 2 or 3 months. We're closing right now. But our anchor investor is OPEC, so I'm pleased to be here on the panel with OPEC, and I've been working in Vietnam for 20 years in the region, having served both in government and the nonprofit sector before being at Indochina Capital, working on reducing low carbon economy for Vietnam, working on policy issues on that for 3 or 4 years before that. Thank you.
Good morning. My name's Andrew Affleck. I'm founder and managing partner of Armstrong Asset Management. We are a private equity firm based here in Singapore, dedicated to investing in renewable energy in Southeast Asia. We finished our fundraising last year. We raised 164 million. We have about 65% of the fund from quasi-public institutions with the likes of IFC, FMO, DEG, Proparco, so European development finance institutions, and also some private capital. We've made a couple of investments so far in the solar sector in Thailand, and we're currently looking to close deals imminently in the Philippine solar sector and the Indonesian hydro sector. Thank you.
Good morning. My name is Erik. I'm Executive Vice President of SM Power, responsible for our Asian business. I've been here in Asia for about 15 years. We focus on we're a developer and investor, a long-term investor in renewable energy, mainly on hydro. We look at projects basically 100 megawatts and above, either buying and rehabilitating, buying or developing and building greenfield projects. They're ultimately owned by the Norwegian government, but operate as any other investor would. Thank you.
Great. Well, our first topic this morning is strategies to minimize risks when investing in emerging markets. I'd like to ask, if I can, Andrew, perhaps comment on some of the key risks that, in your experience, investors may typically face when investing in emerging markets.
Thank you, Jason. I wouldn't say that these risks are just features of emerging markets. Some of them are quite generic, and I'll home them in where it relates to some of our own experience. But I think, key and especially related to power for us, we're operating in a regulated environment, regulated markets, so the political regulatory risk is a key risk. And I think drilling down further, we're investing in the development and construction of infrastructure assets. So permitting is a big issue. We've heard a lot yesterday, and it will continue today, about tariffs that support it are in place, subsidies for renewables, so feed-in tariffs. We've all, I presume, heard about the vagaries in Europe and North America where tariffs have been changed, and that's created uncertainty and price distortion. So that's a key risk. Emerging markets, you can't invest without, obviously, the risk of currency volatility. And in some markets, you can deal with that. Simply in other markets, you just have to take a view that you're going long that currency, and there's very little you can do about it. A core focus for us, and I think for many other funds that are investing in projects in this part of the world, is the environmental, social, and governance aspects of what we're doing. So a key risk, but again, there are key sort of mitigation strategies to address those risks. For an investor, in any market you're going into cross-border, of course there will be restrictions. And understanding those restrictions and structuring your investments accordingly is key. And I suppose maybe the most important we've found a risk, but also an opportunity, is who we're going to work with in these local markets. Finding a good local partner and really addressing that key counterparty risk. Really getting to know who you're working with and that local counterparty. To then help you navigate through, some of the other risk areas that we've talked about. So those are sort of 5 areas that we see as key risks and that we're addressing.
Thank you, Andrew. If I can, I would ask perhaps Robert to talk about what some of the strategies could be employed in trying to mitigate some of the risks that Andrew has identified, or perhaps some other risks that you yourself would like to bring up.
Well, at first, one of the things in this area, because it is renewables are an area that are going through a lot of changes, pricing, which has become very competitive now in terms of use of renewables, and governments beginning to realize that there could be additional savings, national security purposes improved by the use of renewables, some of their regional and global concerns can be mitigated by that. And so at the same time, they see that maybe they've given too much in terms of concessions in the renewable areas, and I think that requires those of us who work in those areas to have a very strong amount of our time spent dealing with the people who are the decision makers. So you have to know the people who are making the rules on governance. You've got to find the policymakers and build coalitions with some of the other firms that are in the same space. You've got to talk to some of the NGOs who are working in that area, and then there are also the governments who have committed funds into countries like Vietnam and Indonesia and Thailand, who are actually helping decision makers make those decisions, and that requires you to really get to know the U.S. Development Agency, or the Australia Development Agency, or the Japanese JICA and JBEC, and some of the other organizations. That's very critical. And organizations at local level like the Environmental Defense Fund or World Wildlife, these are groups that can really have an impact on some of the decisions made. And then the question that Andrew just touched on, I think anybody going into a local market, it's very important who their local partner is, who they have a relationship with, and developing also in terms of who's going to be doing your reviews in terms of technical reviews, making sure you're working with somebody at local level who's done a number of projects before, who has a real understanding, getting really down into the communities where you're going to be doing the projects. Because if you're going to be working in an environmental project especially, reviewing the environmental impact and effects, you want to make sure that you're doing something that meets the criteria because most of our funds have both public and private investments in them.
Thank you, Robert. Erik, if we could, we'd like to perhaps get your view around, obviously SN Power has presence in many markets, and given the size and the diversity of your portfolio of power assets, does this diversity give you any advantage in minimizing the risks associated with investing in those emerging markets?
Yeah, we've actually developed a model to quantify that risk reduction. And if you look at our global portfolio, the net effect of the net portfolio effect of what we have is about 25 to 30% risk reduction. So certainly it has a big impact to be in so many different markets. We see definitely cyclical effects. Markets go up and down. But what I also see a lot of effects of, and unfortunately some negative examples of, is that although some markets have deregulated and they kind of moved in the right direction and have for a long time taken the pain of that deregulation, we're seeing a lot of relatively aggressive governments go in and start to intervene in stuff that they don't necessarily understand the implications of. And that is having a negative effect in some markets where we've previously seen some very positive developments. But we continue to invest in both deregulated markets where we think we can add a lot of value, and where we think in most developing countries that deregulated markets will contribute positively, and in markets which are so early stage that it's too early to deregulate, and we go in and try to work with the governments to implement regulatory structures that allow for foreign investors like ourselves to come in and contribute to the development of that power sector so that it can further deregulate. I mean, Vietnam being one example, Myanmar obviously being another example. And the place where I'm most concerned right now is kind of government interference going on in the Philippines in what was a very, very successful deregulation, where the Philippines has taken a lot of pain, and unfortunately through some steps that are going on right now, destroying a lot of the goodwill and kind of investor friendliness that was built up, and unfortunately I'm afraid kind of pulling back, or a lot of companies are pulling back on their investments because of government interference in the regulatory regime.
Thank you, Erik. Geoffrey, if you could perhaps give us an idea of some of the risk management advice that OPEC might give its US clients when they're looking at investing in emerging markets.
Sure, happy to do that. I think really building on the comments of the rest of the panel, I think a high level, it's picking your team as you go into these markets very wisely. A critical piece of that clearly is your local partner. You want to do your homework with respect to the environment you're going into. Picking a local partner that can help you do that, can help you do that the right way is very important. But also, if you don't have the resources within your team, within your organization, access other sources of information and networking. For example, a lot of what we do is project finance. Clearly, in this space, that's very important. But folks who know about that and what it takes to get a transaction like that done, good international legal counsel, perhaps local counsel as well. Technical advisors who can tell you, okay, the grid is put together this way. It can handle something here, but it can't handle something over here, and so on. I think is very critical. A lot of U.S. investors who are going overseas, they have this perception that, as some folks reflected here, that the emerging markets are a minefield with respect to political risk and so on, and clearly that's not the case. I mean, we've seen what's happened in the U.S. and in Europe and so forth. Political and regulatory risk exist everywhere. It's just a matter of really changing mindset and looking at situations with a fresh and a clear perspective, and really understanding what you're getting into. We, like other DFIs and development agencies, we provide certain tools to help people deal with specific issues, such as political risk insurance. And I won't go into a sales pitch, but really beyond that, because products like that are meant to deal with certain very narrow risks that are, fairly accessible, if you would. The bigger picture when you go into a new market is really, again, as my colleagues on the panel have said, understand what you're getting into, and with respect to local partner, local environment, regulatory and legal environment, other regulations that may affect how you can move money in and out of the country, and taxation and VAT and so forth.
Thank you, Geoffrey. I think a consistent theme going through there was obviously the importance of partners. A former boss of mine who had a high opinion of his own abilities, as bosses often do, said to us repeatedly, he never made bad investments, he just made bad partner decisions. And I think what he's trying to say by that was that often an opportunity may stand on its own. It may have exciting possible returns, but if you make the wrong partner decision, if you choose a partner who doesn't have an identifiable track record of success in the specific transaction that you're trying to do, if the transaction is shoehorning that partner into a deal that they haven't done before, and that's why they don't want to use their money, they would rather use somebody else's money, then you're going to expose yourself to risks. And in markets like emerging markets, because the risks are all that much greater, the importance of that partner decision is critical. Let's go on to our second topic, addressing challenges when moving beyond home market and competing at a global stage. Erik, obviously, with your major shareholders being from Norway, and yet having such a diverse portfolio of power generation assets in Nepal, Africa, South America, and the Philippines, just to name a few. Can you give us some examples of the challenges you have faced as an organization when moving beyond the home market of Norway to competing on the global stage?
We are present in, or we have operating assets in 14 countries, actually no, in 16 countries across the world. And I usually say that money is the easy part, because that kind of looks the same all over. It's getting the people that makes the difference. And for us, what we try to bring to the table is our experience from the deregulated markets in Europe. And that's one thing. The second thing is experience in building or rehabilitating hydros, or the technical know-how. And the third thing is the ability and willingness to be first. We were first in Laos, we were first in Nepal, we were first in the Philippines, we were first in Zambia. A number of places we've been first, so we've been willing to take that risk. Now, to a large extent, that comes down to finding at least the know-how on the technical side, on the market side, is taking people who have that experience from Europe or from the Nordic markets and getting them into the places where we want to operate, and getting them comfortable operating there in the local context, and pairing them with the local know-how. And kind of getting that to work is obvious, or to me at least, the most difficult thing that we do. Because a lot of these guys haven't been operating internationally before, and they're there maybe for a couple of years, and then they want to go home, or they want to bring their families, and some of these markets that we operate in are not necessarily the best places to bring families. So getting that to work, especially Norwegians have gotten so comfortable at home, and a lot of Europeans have gotten so comfortable in Europe that it's not always easy. The same goes for construction projects, getting the technical guys out there, getting the quality of project management and kind of construction deployment capability is not easy. The costs have gone up. Getting good teams to do that and managing that in the energy space is quite challenging. I think we're on that side. I think we're basically looking at a major transition on how we deploy infrastructure in the energy space, and it'll be interesting to see how. I was in telecoms before, and we went through that transition, and I think we're going to do the same in the energy space. When it comes to that's the know-how. So I think basically people, a lot of it boils down to getting the people, and then obviously also operating in the local environment.
Thank you, Erik. Geoffrey, given OPEC's role as a facilitator and provider of finance to US private sector in gaining footholds in emerging markets, effectively helping them globalize. Can you share some of the challenges you see US companies face when moving beyond their home market?
Sure, and I think they face many of the same challenges that others do. I think in the context of the U.S., U.S. investors have are perceived as having a very short-term focus, quarter-by-quarter earnings type of mentality, and there's obviously some truth to that stereotype. I think the difficulties that U.S. companies have in going overseas, partly originates in that. When we go into a transaction, we view it as a long-term partnership with our clients, with the host country, and so forth. And we urge all of our clients to do the same. Especially in Asia, is perhaps more so than in other places. People want to know that you're there as an investor for the long term, that you're not here to make a quick buck. The guidance that we give others and what we see people going through in terms of our investors is really related, in some ways to that. I think there's a certain mentality shift that needs to take place. Some do it well, others not so well. But it's something that I think is relevant for all investors.
Thank you, Geoffrey. Robert, when you look at the competitors in the markets that you cover, what key attributes do you see being critical in giving one firm a competitive advantage over other firms when investing away from home, particularly in emerging markets?
I think the first word would be success. When we were talking just a minute ago, when SM Power and they're entering different emerging markets, one of the critical things is when you go into an emerging market is really understanding it. You have certain rules you have to follow in terms of governance and other issues, and you've been successful at doing projects in developed world first, then you come into developing world. You have to really understand the local culture and have a real sense of how you integrate with that. And that's why we've been all talking about how we work with local partners. And so I think the competitive advantage, a firm coming in and besides having success and having done deals before and being in that space and understanding the sectors and having expertise in the sector would be a big part of that. One of the Armstrong is already known for their success, for instance, in solar. We spend a lot of time in terms of developing expertise in both hydro and wind. But that just is a very, very important part of it, is understanding what you're trying to do in that space. And it's also developing good relationships with the potential people who will invest with you. And that's, I think, important in terms of OPEC has been open in Vietnam since 1998. And they've seen, I think one of the key things is that having people coming in and having patience. You're not going to get everything done overnight. Before you're able to deploy people's capital, you're going to be spending a lot of time getting to really know the country, and you can go through ups and downs in terms of if you were trying to raise money in 2010 or 2011, whether you're a global firm or a local firm, there wasn't too much money to raise beside organizations like OPEC or the IFC and DFIs. The private capital markets were closed down for that period. And only in the late 2012 did they reopen. So I think it's really critical to really understand, when I use the word patience, that you're going to be going through different cycles, and it has nothing to do with you. And you have to have that long-term view of the world. So especially if you come into Asia, you have the word patience means getting to know the people around you, getting to develop long-term relationships with the people you're going to be working with, because these people are going to be here for a very long time, and they're committed, and they come back to their countries. They want to come back to their countries and do for their countries what their knowledge and learning has been overseas.
Thank you, Robert. So I think some very good points there from the panel. You have to understand the market. You have to build good relationships, be patient. You need to be there with the view of a long-term support for those markets, not be short-term focused, profit only, but understanding all the other aspects of the transactions that you're doing, the social interest aspects, all these other aspects, and that if you follow that rule and have good people doing the work, then that will keep you in good stead. Our next topic is strategic partnerships for access to local policy makers as well as overseas finance. I would like to start with Robert. I'm sure in markets like Vietnam, strategic partnerships are sometimes critical, but they can also represent a double-edged sword. How does Indochina view or utilize strategic relationships, particularly around gaining access to local policymakers?
We have made an effort to work with our competitors as well as people we've developed partnerships with, because the Vietnam, in terms of its regulatory framework, is fast evolving, and it was very slow until about a year ago. And right now, the Ministry of Industry and Trade and the Ministry of Planning and Investment are all going, and the Ministry of Energy and EVN, all under a much more microscopic view at the top of the government in terms of making some real progress in these areas. And tariff schedules and wind are being looked at, and biogas are being looked at. So it's a time when we really can have an impact. And so the double-edged sword right now, I would say, is that we really need to be reaching out and bringing people into the circle. And that includes the NGOs who are working in the space. That includes the multilaterals. That includes the governments. So, you know, one of the things I just wanted to touch on from some of the other questions raised is that an organization like OPEC, for instance, it's not just the potential for political risk insurance, but, you know, they're part of the U.S. government, and that's true of any of the other multi-agencies, where just an embassy could ask questions for you when you have issues with a government that you're working in that make the questions much more relevant. And that's the very other important issue, is develop very good relationships with the countries that have invested in your investment, because they want to see it successful, and they want to also change the policy. This is an area that there are so many people interested in getting into and have a passion about, and it's to find those people with a passion.
Thank you, Robert. Geoffrey, as I understand, one of OPEC's roles is to support US private companies entering emerging markets and assisting them in obtaining overseas financing, either by way of credit enhancement or methods or by simple facilitation and introduction. How important or critical are strategic partnerships in achieving this?
I think they're very critical, and I want to thank Bob for saying some good words about OPEC. And we're going to really build upon that, not just for OPEC, but as he mentioned, with other DFIs and so on. You know, we operate in situations where private capital from the commercial banks, international banks, is not available. I'm speaking of financing, but that's also relevant for political risk insurance, where private insurers won't make that available. And so typically these are situations where, you know, a country as a whole is moving, you know, from a planned economy to an open economy, or a sector is doing the same, or a sector is in evolution. There's a new you know, PPP initiative or private sector involvement in power initiative. And because it's a changing environment, you know, very often we're very well placed, you know, DFIs and so forth are very well placed to have a dialogue with government, because, as I said before, for us it really is a partnership. I mean, our mandate is to help development in these markets. So we view transactions from a different light, and host countries view us and our commentary in a different light as compared to the investors from the private sector. You know, all countries, governments are concerned about, you know, the private sector, investors, et cetera, making too much money and so on and so on. And you know, obviously people have to make money, otherwise it doesn't work. But from our perspective, you know, we give them a kind of a global perspective on how what they're doing fits in or doesn't fit into what markets are used to, what the private sector is used to. You know, at the inception of projects or transactions, you know, in many cases that has been very useful. You know, in PPAs, for example, we look for a lot of the things that equity looks for. Not always the same, but clearly many of our interests are similar. And so in negotiating those transactions or other concession agreements, it's very helpful, I think, to have somebody like OPEC or IFC, et cetera, at the table. After a transaction is closed, you know, you're in the mix of things and there are always complications. Again, it's the advocacy that an OPEC or an IFC or an FMO can bring in resolving those issues. Because again, it's not just, you know, private investors from outside the country wanting to do X, Y, or Z in this new situation. It's really, okay, from our perspective, when we come to the table, we're saying, look, we want to make this asset work for you. And you know, this new situation has changed the circumstances, and we all need to kind of shift and step over this to this side and kind of move forward in this direction. You know, and we're working always towards a win-win. What we think would be a win-win for all parties. Of course, I'm generalizing in terms of context, but our interest is really in making that asset work. And typically, when it works for the host country. You know, they get the development benefit out of it. They get the power in this case. It works for the investor. They make their return, or at least they get their money back. And for us, we get paid back. Our loan gets repaid. And you know, OPEC is not an aid agency. We don't give away money. We structure deals to have them be sustainable so that we can get paid back as well. We have to operate at no cost to the U.S. taxpayer. And so these perspectives, I think, add value to the process and are strategic partnerships that bring a lot to the table.
Thank you, Geoffrey. I think, you know, those are all great points. They highlight the importance of strategic partners, but also that you've got to get the alignment of interest right. So long as you structure the deals in a way that, be it the host country, the financier, the provider of equity, if they are separated from the developer, then the developer, that the deal gets structured in a way where parties have real equity at risk and their motivations, their alignments of interest are all coordinated, then you get the sorts of positive results, I think, that you're talking about. We'll move on. Andrew, if you could perhaps give us some perspective on how important you have found strategic relationships in getting access to policymakers, particularly around power policy in the Southeast Asia markets and or gaining access to finance for the projects that you're involved in.
Thanks, Jason. I'll keep it brief because there's a lady at the back that you can't see waving Q&A, so get your questions ready while I... we've heard that the DFIs play a key role, and I think that's not only from a funding, both a debt and equity. You know, we have a number of those development finance institutions working with us in the fund, but also at an advisory level when governments are looking to set policy. A specific example, IFC, for example, working with the Thai government at the moment in how best to implement policy going forward for solar feed-in tariffs, and in particular rooftop solar. You know, and practitioners, developers, investors like ourselves, I think where policymakers benefit is to understand what has worked elsewhere, what hasn't worked, what works to get private capital in. And of course, you're not always aligned in your views, but I think the dialogue needs to be constructive. You need to be open to listen as well as to tell. These are key issues. I think the other part which I hope to see grow more in this part of the world, which works quite well in developed markets, is also trade associations. As we get more stakeholders involved in the respective sectors, is to create and expand upon trade associations. Again, it's that practical, not just the theory of what can work, but the practical aspects that can work. So trade associations, I think, is a way that can bridge the dialogue between policymakers and practitioners. So I'll stop there and then hand it back.
Thank you very much, Andrew. Well, I guess that concludes the panel's responses to these questions. Perhaps we have some questions from the floor, if anyone would like to ask.